right. Good morning, good afternoon. We'll get started in a few minutes, or sorry, in 1 minute or so. If you can give me a like by letting me know you can hear me, you can see me, then I know it's fine and working. So a like, 1 like for I can see you, and 1 like I can hear you, then we'll get started in about 30 seconds or so, just about. Okay. So Gail and Mickey, no likes are coming in. I assume you can't hear me. Can you hear me? Okay. All right. We'll assume everything is fine. We will get started. Today we are doing the second session for the ingredients for success, which is based on my experience of about 15 years of investing and primarily working with many investors over that period of time and seeing what works for them, or when it comes to real estate investing. Hopefully, sound is okay. We do this session. First of all, good morning. My name is. Hang on a second. We have to start the recording. Just make sure. Well, good morning, good afternoon, good evening, depending where you are. Danny Beit-Or from California. We are doing our weekly session about real estate investing, and we have the second part today of ingredients for success. The ingredients for success is something that I'd like to do near the year end and the beginning of new year. I usually do it, I do it once a year. It's something that I've put together some years back when I was invited to speak for a group in Silicon Valley, and they wanted something a little bit different than your typical real estate investing, class. So I decided, instead of tackling the course aspects of real estate investing, like foreclosures and REOs and different strategies, just to talk about more of the foundation, your foundation for success. And I divided it into 2 parts. Part 1 is the trivial stuff, which we did last week. And if you missed that, you can actually, hang on, we have a little bit of problem here. If you missed that, you can actually catch that on our podcast or catch it on YouTube. You can actually view it, no problem. So first part was what I call the trivial stuff, and I'll just recap it quickly and say the trivial stuff is location, location, location. Making sure that you find the right thing, setting up the right deal, setting up the right team, buying low, selling high, doing your due diligence, knowing your market, investment criteria, and the exit strategies. So this is something we talked about last week. Of course, in more details. I'm just gonna quickly recapping. And today we're gonna do part 2. The part 2 is what I call the less trivial, or in other terms, I call it the investment muscles. And I'm gonna talk about things that are more quality and not quantitative. And those things, what I found, are helpful if you remember to use them. It's like different mental muscles or investment muscles to help you succeed. So by all means, if you have questions, we hold these sessions every week. If you have questions in the live, post them regarding the topic. If you want to have questions that are not directly related to the topic, but are related to investing, by all means, you are welcome. The whole purpose of this session is to engage with you either during a live, like we have right now, or during the post-live, when you watch the recording or listen to the recording on on the audio podcast and online. Okay, so let's go through the. I think I have like 8 or 9 different what I call investment muscles. I'll go one by one, and I will explain what I mean, and then I'll take your questions, of course. So the first muscle, which I think is important, is defining your success. Now, why? We all talk about it, and I don't think you need to take too much time to really define your success. For me, it's like more defining a specific goal you want to get to, even a short-term goal. Let me give you an example. One of my investors who lives in Silicon Valley defined, and I'm talking about mid 2017, I think mid or towards the end of 2017, that by the end of the year of 2017, he wanted to own 2 properties. And by the end of 2018, he wanted to buy 5 more. So that means by the end of 2018, he wanted to own 7 properties, which I have to admit, not only that he accomplished that exactly, 7 properties, he's already exploring the next ones. So that's a very, and he was very much he still is a very much goal-oriented person. And he said, that's my goal, that's what I want to accomplish. And we were able to accomplish that. So that means a very simple, right? On one by the end of the year, or buy my first rental within the next 3 months, whatever, something, keep it simple, something you can easily measure if you succeeded or not. That will calibrate your mindset towards achieving that goal. So I think defining even a simplistic goal is important, and may even write it down somewhere. That will help you make sure it's, to internalize it. So that's number 1. Define your success or your short-term goal. Don't go ballistic with, life goals, because sometimes they are longer to accomplish and hard to accomplish over time. 1 property in the next quarter. I think that's a very achievable, very easy goal to understand and to follow, Number 2. Determination, very, very, very important when it comes to real estate. When you're in the process of investing or owning real estate, be ready. You will have points or interaction of discouragement. For example, the guy that I just told you about, it wasn't easy for him or simple to buy the 2 first properties by the end of 2017. He made offers, he got offers got rejected, offer got accepted, he didn't pass the inspection. So there's things that he wasn't planning on that showed up and created the discouragement. However, he didn't let those incidents, and you know what? It will happen. It's not if it will happen or not. Something will happen along the way, either in the purchase period or even when you own the property. Remember your goal, remember the bigger picture. I see many times investors freaking out on a house that it takes another month to rent, and they're losing their sanity for the wrong reason. Who cares about another month or 2 of vacancy? Not that I don't, but in the bigger scheme of things, who cares about another month or so of vacancy when you're looking at an investment that's going to really significantly impact your future in the long run, in the long term, right? So you will not even remember in 7 years from now that along those 7 years accumulated vacancies, you probably had, I don't know, 6 months, right? Let's just say 6 months to combine, not per month, not per year, combine. You're not going to remember. You'll remember it, but it's not going to be as significant in your financial life. So determination will remind you to stay focused, will remind you to stay on track and not to get discouraged by the things that will happen. Vacancies and miscommunication with property managers, and maybe even getting an eviction, that can happen too. And something breaks, those things will discourage you. And if you're not determined, they will probably, put you on the back burner and not execute. So determination is important. It will significantly help you. That was number 2. Number 3, focus. Focus. It's probably maybe one of the most important thing to remember, to stay focused. And why do I say that? So I've been investing in real estate since 2002. So that makes it what, 17 years now. I have been helping others to invest in real estate, supporting, supporting, answering, handholding, mentoring, whatever you want to call it, since 2004. So that makes it what, 15 years, right? 15 years of, on a large scale. I'm talking about the thousands of, real estate purchases that I was involved in one way or another. And I can tell you, and by the way, I've done probably more than 300 lectures, maybe 350 lectures and events, and probably a similar number of web events, not even counting those, short live Facebook, sessions. So I've done a lot of events, and many times what I see is this. Someone goes to a real estate event, and they find there's a really good speaker, and that speaker talks about buying mobile homes. And I'm not going to say mobile homes is good or bad. I'm just saying buying mobile homes is one way to go about it. No problem. And they, the person is really articulate, looks good, sounds good, experienced, perfect. People leave that session and saying, you know what, that's exactly what I'm going to do. I'm going to start investing in mobile home parks. Perfect. Good for you. And then the following week, they go and now they're in another seminar. This time there's someone else who talks about apartment buildings, and it makes it sound simple and doable and makes sense. And that same person that until 2 hours ago was focusing on mobile home parks, now he's doing apartment buildings. He's finishing the session and he's doing an apartment building all the way to the following week, week number 3. Now he comes in and this guy talks about, with an accent, talks about single family homes out of state. Right, and this sounds simple, and this person who's attending all those meetings switches now to third strategy, and see what happens. He's losing focus. Find your niche. Your niche is not going to be your niche for life. It's going to be your niche until you think you need to refine your investment strategy, and that's fine. You think that mobile home park is the way for you to start, which I'm not advocating in favor or against. I'm just using that. Go for it. That's perfect, right? And follow through. Execution is very important. But if you start jumping around and bouncing back and forth and questioning yourself all the time, you are not going to be be able to execute, or it's going to be very hard for you to execute. So keep that in mind. Stay focused. By the way, one other thing that I see, especially beginners. Beginners doesn't have to have not purchased, but in the starting phase, and that are a little bit insecure. What they're doing is they're many times talking to others, their parents, their friends, the wife's husband, the wife's father. Different stories I hear all the time, and many times those other people around are providing, wrong advices. I can tell you, when I got started, I did my first real estate investment, U.S. real estate investment, still living in Tel Aviv, Israel. Everybody around me, nobody was doing it, and everybody was investing in the U.S., not to mention in real estate, but plenty of advices, right? Mostly for people who has no experience. When you see that person who's coming and giving you an advice, I would suggest to do one of the following things, maybe both. Number one, ignore. Put your blinders for the focus and put your earplugs. Ignore that person. If you still want to listen to that person, my suggestion is reply to that person. Oh, that's very interesting. What is your experience? How long have you been doing this? What did you find to be successful? And many times you will see that that person has zero experience or very minimal, but they're giving you the advice. And many times they are actually copy pasting verbally something they heard somewhere else. I call it conventional stupidity, not wisdom, but stupidity. I can tell you that I've been, one of the events I've done a few years back, some lady comes to me after the event when I'm done, kind of still in the room, and started talking to me about property managers and their services and their fees and really going into it. And then I asked her, why are you so concerned about if it's 7% or 8%? I mean, I understand everybody wants to get lower fees, but 7 and 8% is not, 1% difference, not gonna make it, a big impact. I said, how many properties do you own? She says, none. How many properties are you on the contract? None. How much experience do you have? None. She was going on so many things related to real estate investing, but zero experience, zero activity, only talk, right? So keep that in mind, stay focused, and you know, avoid the distraction, especially from the conventional stupidity. I've been doing it for so many years. There's things that I've heard again and again and again and again. You know what? Those things do not, many times, not always, do not materialize or do not significantly materialize in real life, right? It's more like someone thinks about it, and not actually happening in real life. So keep that in mind. You know, avoid that. You know, stay focused and avoid that distraction. Leading you to the following point. Point number 4: mentorship. What do I mean by mentorship? If you want to invest, again, going to mobile home parks or whatever niche or strategy, find that person that can help you, either for free, either for a fee. You know, many times those people who lead a certain strategy have the experience. They have already ironed out or you know, got the kinks out of the system for you to just follow through. It may seem like if you're paying someone $2,000, $3,000, $4,000, $5,000, seems like a lot of money, but then if you actually see the benefit of what the tracks they've delayed, how many mistakes they, you know, they can help you avoid, and find that, especially when you're a beginner, it will save you time and mistakes. And you know what? We live in a time that many, you know, there's so much information out there. Sometimes you just want to pick up the phone or send an email to someone who's experienced and get there and pick their brain and talk to them about it and see what they think. And kind of, you may not even decide to follow that mentor's answer or idea, but at least you've been through some brainstorm with an expert. You know what? Forget about expert. With an experienced person to help you make better decisions. That's what, for me, mentorship is all about. And it's worth, you know, it's like a shortcut, right? There's a fee for the shortcut, but it's like a shortcut. So mentorship, very, very important. That was number 4. Number 5 is what I call educating your gut. Educating your gut. What do I mean by that? Many times, we have a gut feeling about a decision, right? That decision for us can be, you know, we don't know if it's going to be wrong or right. We just have to follow the gut. The gut is our values. The gut is our, you know, our truth. Many times what we do is we gather the information in order to get that, you know, make that decision, right? So gather the information. That's what I mean by educate your gut. Collect the data, quantity, quality, talk, analyze, whatever. This is all educating, because there's not always a clear cut what needs to be done. We know that, right? And that's what I mean by educating your gut. Use that, embrace that, bring information in, analyze it, get it, you know, get comfortable and make a decision what your gut is telling you. Many times when I talk to investors and they tell me, you know, everything is fine about the property that I'm looking, but I'm not sure. I'm not sure about it. I may not, you know, I don't know what to do. You know, and I try to explore with them what's the reason they're not so sure. And when they see that it's a strong feeling, but not necessarily logical, but there's a strong feeling, I say, listen, trust yourself. It's okay. There's going to be other houses. Let's drop this one and move to the next one. Your gut is telling you something. Listen to it. Okay? That's what I mean by educating your gut. Number 1, 2, 3, 4, 5, 6, confidence. Number 6 is confidence. Now, what do I mean by that? When we are, the more investing we would do, the more active we are, the more confident we will be about making decisions, right? So it's hard to be confident, you know, when you're lacking the experience. So build that activity for making decisions and investing, and again and again and again. You know, you don't have to do it every month. You can, but that's not what I mean. But don't let it kind of slip away from you. Keep that in mind. You know, it will build your confidence. When it builds your confidence, you'll be able to make better decisions and smarter decisions altogether. So confidence is important, but you have to, confidence comes primarily either from taking action and execution, or it's inherited by using someone else, like a mentor. I can tell you many times that I had investors that lack the confidence, and when I told them, listen, everything I see about this property, I like. I think there's no such thing as a perfect property, but considering so many things, I like this property very much. I think you should move forward with it and make an offer. and they, they did or didn't. Every situation is different. And they told me after or during, you know what, that actually helped me because I feel that I'm lacking the confidence, but I'm using yours, I'm leveraging yours. So that's very important. Second point, next point, number 7, support system. What is a support system? Well, support system is people around you that you can turn to. It can be from friends that are in the industry, a mentor that you're working with, maybe the property management company you're using, a realtor or more than one realtor. Those are the people that when you need some advice, they will be around to provide it to you and help you. So build that support system. It's a very fundamental part of your foundation. I can tell you that recently I've been through some challenges on some of my flips, and I immediately started reaching out to my support system in niche of investing, asking questions, running ideas, getting emotional support, getting mental support, suggestions, ideas, and so on, just to get out of a difficult situation. That has been my support system. I didn't even realize until I needed it how big of a support system I have already just by interacting, just by helping others. I have a team of people that I work with in Chicago, and they say, listen, the day you came into our life and started working with us, our business completely changed around. You bet we will be here to support you when you need. So we want to thank you for helping us. Now it's time for us to actually repay you, not because we feel obligated, but we feel blessed by having you in our lives, and we want to help you as well if we can. So support system is important. Invest in your karma, so to speak, because if you need it, it will come back. I have done, I've been on both sides, and I've seen how I invested in other people, helping them, and then getting back from them when I need it. It was a really humbling experience, and I'm glad that I was able to reach out to those people, multiple people, and get their advice and support. So just it's a tested idea or concept. So that was number 1, 2, 3, 4, 5, 6, 7 was support system. Number 8, know your strengths and weaknesses. Okay. Now, what do I mean by that? Know your strengths and weaknesses. Let's use an example. An investor that I spoke to about a month ago kept repeating in the conversation, he doesn't really want to deal with it. He doesn't want to be involved. He wants to be, I could tell that he's either intimidated or he's, doesn't have the time because he's busy. So his, weakness is for either not the time, doesn't have the time, or doesn't have the capacity, mental capacity to stay actively involved with his investment. And we kind of talked about it, and I wanted to understand, primarily I wanted to make sure you understand in our niche of investing, which is single family homes, rentals, how much time and effort it really would need. And once he understood, he said, okay, I'm okay with that. That's something is acceptable, but he wasn't the first one who told me that. So for him, it's probably, and I told him, it's probably better from the questions and from the content of our conversation, I can tell that it's probably better for you to invest in something more passive, maybe in a REIT, maybe in a syndication, something that will put you in a very, very passive, for whatever reason, right? So that is something that you need to ask yourself. What are the strong suits? I'm a type A, I want to be involved, I want to be, and that's fine. That, one investment is going to be relevant for you. The passive investment is not. I had a gal from San Francisco. This is probably 3-4 years ago, and we were discussing flipping houses in Tampa, and she wanted to be involved in every little design detail, like the tiles, the paint, the countertops, the kitchen cabinets, the vanities, all of those things and more. And I told her, listen, this is just not going to work for 2 reasons. Number 1, you're in San Francisco, the property is in Tampa, you want to bring in all your knowledge from San Francisco, and you're not a designer, you just want to be involved into the Tampa market and dictate what needs to be done. You can, but you're probably going to make wrong choices because different culture, different taste, and so on. So that's number 1. Number 2, from my experience, when the investor wants to be as deeply involved, he will slow things down for the process. And that means, in that case, will come back to us and say, why it's been taking so long? It didn't work for our system, right? She wanted, it just didn't work for our system, and we ended up not doing a flip together, which is completely fine. I'm just saying she was not comfortable with not making those decisions. I was not comfortable with her being as deeply involved, and that didn't work. So this is a type of strengths, and weaknesses we need to know in order to find the right investment niche. So know those things. And by the way, this may change. You may start as an investor with minimal experience with owning rental properties, and you gain that experience. And by the time you do your second, third, fifth, you already know what works and what really works, and you also know about yourself what works, what doesn't work for you, and you refine your strategy or investment niche. And the last point, I think it's number 9, is what I call greedy. Greedy has a very negative connotation, right? People don't want to be greedy, don't be greedy. You know what? I'm going to change that. I'm going to try and change it, at least for some of us or all of us. I think that being a little bit greedy is a good thing. And I have learned that aspect from some of my investors, that when we had a deal or an offer in a house we were selling, they kept asking, maybe we can squeeze a little bit more. Maybe we can, can get a little bit more out of this transaction, and not just accept the first offer that comes through, maybe negotiate. And I can tell you that that actually worked many times, not always. What I'm trying to say is this: if you're a little bit greedy, you can always ask for more. Worst case, you'll get rejected, okay? Or someone will say no. And every time I have an offer on a house I sell, this is usually where I see it. Oh, actually, when I'm making offers and when I'm selling houses, I'm always trying to get more. I always try to be a little bit more greedy. Not a pig, bad, greedy person, but just, let me give you an example. We had an investor making an offer on a house very close to Nashville, Tennessee. And that property was already on the market, in a very hot market, for probably more than 30 days, maybe even more than 45 days, right? Which was very odd. And the owner was asking for $220,000. And everything checks fine. And even at 220, it was not a bad deal. But because it was sitting for such a long time, we knew something is off. We offered $200,000 with a clear purpose to close somewhere around 210. And when we did that, we were actually able to get this property, I think, for $207,500. Now the agent was very hesitant to do that. The investor also was a little bit hesitant and and I was the only one who said, listen, worst case, she's going to say no, right? Or we negotiate and come to an agreement. So the investor, I think, was a beginner investor, maybe already done 2 or 3 investments, so he's not fully experienced. He told me, okay, I'm going to follow your lead. I'm going to make that offer, and it actually worked very well for the offer. Eventually, we didn't end up buying the property because this was a very difficult seller with all sort of requests and conditions, and she probably didn't sell the property until today. So just to show you, be a little bit greedy when you're buying, be a little greedy when you're selling. That's fine. On the other hand, I had an investor who was trying to buy a house in Houston maybe 4 years ago or so, and he kept making really low ball offers, right? He makes one, doesn't work. The second one, 9 offers, none of them worked. I called the agent, said, what's going on? What's the pattern here? And she said, listen, this guy keeps doing really low ball offers in a very strong seller's market. It's not going to work. It is just not, he's not even making a little bit lower offer. He's really making low ball offers. I called him up. I said, listen, here's statistics. He was frustrated. I said, statistically, 9 offers, 0 success. Something is off. Is it possible you're doing low ball offers? He says, yes, absolutely. I said, okay, maybe rethink that. And we talked about it. We came up with a refined strategy. He made the 10th offer, and he got accepted, and he owns that rental property. So being a little bit greedy is fine. Being, terribly greedy, I don't know. That'll be your own personal gut or value system telling you. With that said, I am done with all the items that I wanted to cover, what I call the investment muscle. Those are the non-specifics. Let me just repeat them. We talked about number one, defining your success. Keep it simple, but define it. Something is achievable. One house by the end of the year or within 3 months. Stay determined. Don't let other people discourage you or problem discourage you from moving forward. Stay focused. That's very, very important. Don't get distracted with other alternatives and options. Mentorship can save you time and money and mistakes. Okay, so don't be shy or hesitant to pay for it and find that mentor in your niche. Educate your gut. It will help you make smart decisions, and trust your gut when something telling you, I'm not sure about it. Invest, and build your confidence. Confidence is important. It only comes from taking action or inheriting from someone else, such as a mentor, that can help your own lack of confidence, if that's the case. Invest in your support system. You would need it. Not maybe, you will need it. So make sure you invest in your support system, such as property managers, mentor, realtor or realtors, lenders, etc. Know your strengths and weaknesses, and find that investment niche or strategy that fits them. You're busy, find something that that fits your busyness. You're a control freak, find something that is an investment strategy that fits that. No problem. There's nothing wrong with it. Just make sure there's a match and let it evolve over time. And greedy, the last one, greedy. Staying greedy is a little bit of greedy. I think that's fine. Asking a little bit more to squeeze out more of a deal, nothing wrong with it. So I would say mildly greedy is not a bad thing. With that said, I am now done with what I wanted to cover, and I'm going to open it to questions. Hopefully you have questions. You can post them in the live or on the recording when you watch them, or send it to us by email. I also want to mention one more thing. If you want to be on our mailing list, go to our website, simplydoit.net, and register. You'll get two things. One, we have a series of short videos that you can learn, like this one, that you can benefit. None of them are this long. They're all 4 or 5 minutes, maybe 1 or 2 or 10 minutes. Just education about real estate investing that we put together. So that's one benefit. Second benefit, when we promote events or properties, you'll be able to receive those promotion or emails and stay up to date with what's going on, and stay up to date with investment opportunities, etc. So by all means, join our mailing list so you can get more than just on the Facebook Live. And again, we are doing this every Friday, almost every Friday. We missed 1 or 2 along the year. At 11 a.m. Pacific time. Typically, we are recording this and putting it on Facebook, podcast, and on YouTube. For some reason, our YouTube camera is not responding well today, so that's probably not going to be on YouTube just yet, unless we're able to find a way to put it up there. With that said, I am done with the topic for today, and I'm going to wait here for a few seconds for your questions. Hopefully, they will come. If not, that's okay too. We will wrap it up for today. So I'm going to just wait a little bit and see what's coming. Very good. Okay, let's wrap it up for today. I want to thank everyone for participating, for joining, for staying, for watching, listening. I hope to talk to you soon, hear from you soon, maybe see you on our mailing list. Have a terrific rest of your day and a terrific weekend. Bye-bye, everyone. Bye-bye.